Let's go!
Hey everybody, welcome to this episode of the DeFi Zoo. It's me, Chris, here with one of my wonderful co-hosts. We got Andrew back on the show. Andrew, where'd your beard go?
Went into the trash can. Went into the trash can a little while ago. We may or may not be growing a new one. We'll see.
Hey, I like that idea. Can you tell us exactly what happened to the beard? Like, what was the onus of not keeping the beard? Were you looking to decentralize your beard growth or something like that?
Well, it's a lot more mundane than that, Chris. I was going through a really kind of aggressive period of work. So aggressive that I was not doing proper beard maintenance. And due to that lack of proper beard maintenance, it felt like it was just easier to let it go.
I hear you, brother. I hear you. You know, that's kind of what happens. I started this project, this beard project on the top of my head about 18 months ago. And originally it was going to just be, and it still is, it's cut like a mohawk. But I started noticing a lot of thinning over the last year. So I was just like, this is it. This is my last hurrah. This is it. I'm not going to have any more hair after this. So I'm growing it out as long as possible. I mean, I think I'm channeling some John Wick vibes right now, which is dope AF, if you ask me. Found out recently, anybody who's a creator, if you curse in the first 15 seconds of a video, you will automatically be demonetized. So I'm stretching this out. I think we're almost at 2 minutes.
Clean today.
We're going to try and keep it as clean as possible, but you know, stuff will come out every once in a while. But yeah, that's crazy, right? It is what it is, right? There are some people who, you know, have potty mouths, and we have.
Hey, there's a reason YouTube is a lot cleaner than Twitch is.
This is true. This episode is here to review 2022 and what a year 2022 was. I can definitely say that, I don't know about you, Andrew, 2022 has changed my life with regards to my professional career, being here in DeFi.
It was a wild year.
It's a wild year.
Lot happened. It can be a little hard to make sense of it. I think I'm better off, but it was definitely a bumpy road.
Yeah, I agree. A lot of things have happened. Some made the mainstream, some haven't, which is fine. You know, it's going to be like that in this, you know, in this environment. But what I want to do first, before we get to the gloom and doom of seemingly what was 2022, there's a lot of good things that happened, but there's been also a lot of gloom and doom. We're going to start off with WoW.
Wow!
And WoW is Wrong Answers Only, our lovely little segment where we talk about, you know, something that we tweeted on Twitter through our @the DeFi Zoo account. Feel free to follow that. And today's WoW for this episode is, what is going to be the breakout crypto hit of 2023? Wrong answers only. So with that said, Andrew, do you have one where we can say, wow, what's going to be the breakout hit of 2023? Wrong answers only.
Well, I think this, you know, what's going to happen in 2023 is Do Kwon's going to come back, and we're going to get another algorithmic stablecoin from Do Kwon and his team.
Wow.
And this time it's going to be exclusively focused on the Japanese yen. Or
Very
is it not the yen? The Japanese currency.
The yen.
There we go.
Fun fact about that. Myself being a recovering lunatic, hello to all my lunatics out there who watch this episode, is that UST is not the only algorithmic stablecoin that was tied to Luna. There was roughly about 17.
Yeah, just nobody used or thought about those.
True. I mean, but you know, they were all out there. They were all working, I think, at testnet. But you know, UST was of course the one that was the most hyped. But there is a KRT for, you know, the Korean won. There is one, I believe, for the Japanese yen. There's definitely one for several European countries. So
you say that like they still exist, do they?
They do. I mean, when you deploy stablecoins, they're smart contracts. So I mean, it's
Yeah, but are they worth anything? Is there
No, there's
liquidity?
not. Who knows if there's liquidity? I mean, if anybody wants to check it out, yeah, I'm sure. But
All right, all right.
I mean, it's all. Of course, it's all. They all have the minting uh, mechanism tied to Luna. So whether or not that those can ever be resurrected and reused, now that I'm not completely sure of, because I just don't know. I haven't paid as much attention to Lunacy or LUNC Luna Classic since the issues happened. We'll talk about that in
Lunk,
our year in review.
lunk, good old lunk.
Yeah, I think lunacy is a better word because it's a little crazy to to consider such a thing. But in any case, love that. I'm gonna go through some of our responses here. Breakout hit of 2023. Krabata makes a comeback. Wow.
Ooh,
That's I'm not
I,
gonna say
I
that.
actually think mine is crazier. That doesn't seem completely impossible.
You're right. You're right.
Like they could
Personally,
just
for
fork it and start over at the beginning of the next bull market, and like technically it could be a comeback, right?
yeah, true, absolutely. Well, I do have a couple things. I will say that for me, I think the breakout hit is going to be USDT Tether. $5 is on the table. USDT Moon to 5. So, obviously that would be a wild off peg, but it's funny how people can start those little rumors and about that idea of that happening. I don't obviously think that doesn't happen. Just to fall under that narrative, we've had several people also write in, Mr. Smith says USDC to the moon. Buy a knot says die to the moon. Active J says Terra comes back and overtakes ETH mainnet. That would be because for their credit, there's been a lot of FUD about what's going on. FUD being fear, uncertainty, and doubt. There is possibly, Do Kwon is still working. He's still building for those not using Web3 speak. And there is a chance that Luna 2 comes back roaring, to be quite honest. Those of you who were affected by the Luna crash, obviously you got an airdrop of Luna 2 lately. I personally need to go figure out, how little that is for myself and figure out what to do with it. I'll probably just stake it like the rest of the Luna I've received from my airdrops. Did you have any Luna airdrop to you, Andrew?
Probably. I think I've just let it chill.
That's always a good answer. Probably.
I'll come back in 2023
for 2023 breakout hits. Wrong answers only. From Stoop, we got the idea that FTX reopens for deposits and offers 69% APR. Wow.
Wow.
Yeah. So thanks to everybody for contributing to wrong answers only, or wow. It's been a lot of fun. I can't wait to do more of these in the new year. So mainly I have Andrew here to kind of go through a lot of this 2022 stuff because we lived through it together for the most part. Just seeing all of the crazy things that have happened. Ultimately, when we're just talking about what happened in 2022 in DeFi, crypto, and Web3, I think the biggest narrative of the year, honestly, based on what we talked about even in episode 1 of the DeFi Zoo, is just the demise of the CEX. CEXs, now don't get me wrong, CEXs or centralized exchanges are still out there. We still have Coinbase, still have Binance, we still have Gemini for now. Gemini, Kraken, and a lot like KuCoin. Some of these MEXC, some of these smaller CEXs are still out there that are available for use to on ramp and off ramp money into DeFi or Web3.
Who would have thought that KuCoin would have outlasted FTX? Not me.
Who would have thought that KuCoin would have outlasted BlockFi? That to me, that was the BlockFi is practically your mom and pop shop. I mean, they do all manual withdrawals and deposits. So I remember I learned that lesson the hard way this time last year because I was trying to help somebody out who wanted to get money off of BlockFi or just wondering how the mechanism worked. And I actually went to put in a withdrawal request on Christmas Eve at like yeah, that was my mistake, and it did not get processed until the 28th because they those the weekend and they take holidays off and all that kind of stuff.
Well,
So
hey, at least you got it out before it collapsed. You did it
this
far
is
enough in
true.
advance.
Yeah, if I pulled it out, 11 months in advance. It was great.
Just in the nick of time.
Just in the nick of time. So yeah, we had huge CEX meltdowns this year. FTX, strangely not the largest of all of these. It's still obviously happening. Contagion is going to be coming, which is going to affect the rest of the market with regards to debt contagion and honestly just panic. Right now, everybody's watching DCG and Grayscale and seeing, and sorry, Genesis is probably the better word to use here with regards to just crypto funds, just to make sure that they can make it and pay off all of their creditors and not go bankrupt. If that happens, we're going to see another slide, and I think that's going to be pretty crazy. So let's go through the list of all the ones that are out there, Andrew, that pretty much died a painful death this year. We had a bunch of smaller CEXs off of really the biggest one in the beginning of there towards the middle of the year, which is Celsius. Celsius taking a big hit because of what happened with Terra Luna and UST positions. They took a huge hit there that led to that, and a very public bankruptcy filing. I know multiple people whose name is on that ledger with all of their trading information. That was released in the bankruptcy papers, which is yikes, right? I never used Celsius. It was a decent place, specifically if you were looking to off ramp funds into Polygon in particular. They had a nice USDC bridge there for that, and they offered some good rates. I mean, the point we're making is that with all of this, it just kind of shows that self-custody, which is something we talked about in episode 1, is king. And if you're not in a position to self-custody, find someone to help you out with a multi-sig wallet, or look for a service that will at least help you, teach you how to self-custody your funds to the point where you can feel comfortable about holding that type of coin on your person, because in Web3, you own your data. So that's the key. Self-custody is king. Voyager, another casualty off the back of Celsius. That died a painful death. I think Binance tried to buy some of those assets and they were turned down for that, which is kind of crazy. But yeah, that led to FTX, which strangely not related to any of these. We saw, the basic ideas of what happened with an argument with CZ, the CEO of Binance, that led to FTX just getting exposed. Just caused a huge run, and we've talked about it before. You can go and check all that out. We're not going to cover it too much, but gosh, Andrew, what a crazy web of deceit and lies that got uncovered just from FTX getting called to the carpet when someone asked them could they show their proof of reserves.
Yeah, I mean, it's just another example of everyone just being completely over leveraged. And also just all the cross contagion.
It also kind of gives, it's also telling in a way of, when people talk about, how are protocols able to provide such yields, right? And the answer is probably a mixture of some of these unseen pools and leverage that people are taking on the other side with your, with any funds that you may be staking in smart contracts, specifically at the CEX level. I think a lot of that is what's happening. When you go to somewhere like, for example, it's called crypto.com. You go and you stake, and they require that you stake assets for 6 months or 4 months or however long that is to gain a specific, APR. Like 10%.
Yeah, that feels a little sus, doesn't it?
It does. At the time you're like, oh, I guess it's just the way of doing business. But after everything is kind of come to the carpet, you're like, no, that's sus. That's very suspicious.
It's almost like they're repaying previous investors with the money of new investors.
Wow, I don't know what that would be called, Andrew, but it sounds like this game I know called Among Us. Who's the imposter?
Among Us and Bernie Madoff all together.
I know. Maybe that's apropos. I know my kids would love me taking the moment to jump cut some Among Us information in here, overlaying that on here. So yeah, that's the demise of the CX. Didn't really want to take too much time talking about it, but gosh, what the butterfly effect of stuff like that on us as retail investors has been huge. I know many people who were unable to get their funds off of FTX.com or FTX.us, excuse me, or some of these other CEXs that went under because of what was going on there. It's just crazy. There are multiple projects that had their treasuries on some of these CEXs because really, I guess there's no better way to do treasuries on chain. There has to be, right? But many of them put them at the CX level because they can then withdraw it and send it.
It's harder, and they feel like it isn't as safe, so they don't do it.
Right. So 2023, developers, build a better system for this. Simple as that. Give us a call. We're happy to help out. You can hire us.
There you go.
There you go. You know, that kind of led to the next segment we're going to talk about, which is big projects / blockchains dying. And this is probably the saddest part of the contagion. This time last year, we were reveling in the bull market, right? Bitcoin above 50K, Ethereum, Ether above 3K. I mean, what a time to be alive, I guess, that time. Probably the biggest one of the year has to be the death of what's considered now lunacy, or Terra, the first edition of Terra with Luna. There's a lot of FUD, if you want to call it FUD, or accusations that Alameda with Sam Bankman-Fried from FTX is actually behind the attack on what caused the downfall of UST. And UST is what we call an algorithmic stablecoin, meaning that, you know, that has a specific peg that's maintained algorithmically. And we saw this year how easy it is to manipulate that peg, because essentially UST was this close to breaking out into being a superstar of a stablecoin to be investing into, but it got attacked literally less than 12 hours before a beautiful 4 curve pool was going to be on curve with stablecoins, and then I think it was UST Frax, USDC, and I guess USDT, I think is what it was going to be. Do you remember that? Do you remember that move, Andrew?
Yes, I do. And I feel like the question then to me is, well, who stood to benefit from it? And I would assume, but that's complex because like anyone could benefit from it if they were set up to trade against it. So was Alameda? Had somebody already figured this out? I don't know.
Yeah, you know, I as a committed lunatic, I can definitely tell you that it was an exploit, in my opinion. It was an attack. Obviously, we can't prove that, and it's long past. But it's a funny coincidence that it happened at the exact moment where there was the least amount of UST liquidity outside of chain to try and take a huge request to short it. You know, it's when you think about how it all unfolded and how it happened, and you can research all that. It's fishy business, in my opinion. So we saw the death of UST. It fell from grace quickly outside of Luna. If you were on Luna, on Terra, if you're on Terra, nothing looked different. But it was at the CEX level, it was everywhere else where people were making a run. And it was only a matter of time before everything else, felt like a house of cards. Another one is USN, which is from Near. They actually were an algorithmic stablecoin pegged to the value of Near. They actually moved to USDT as collateralization. And then they shut down about 4 months ago, I guess. I'd have to check the dates, but that was actually a very interesting move because they saw the writing on the wall and decided to shut it down to protect all of their users, which was great in my personal opinion. So I guess kudos to them for that. Another thing that you could quote unquote say died this year is Tornado Cash. Your friendly neighborhood privacy creator when it comes to currency.
It didn't really die. It just became illegal in the US, right?
Well, yeah, it got OFAC sanctioned, which of course, made it a unfortunately shady place. But I just think that it's a shame. There are plenty of these founders who, people are accusing of just being terrible, and they quickly found the developer of Tornado Cash, and he's just sitting in jail with no hope of ever getting out for code, which ultimately is for a privacy move. I'm not going to advocate either way for which is better. I mean, I will say that privacy is important in Web3, and there should be mechanisms like Tornado Cash for activities where privacy is necessary, specifically with any chance of anyone trying to trace you publicly, I guess is probably the better way to speak about it. Obviously, it's a double-edged sword. Do you have any thoughts on privacy with Tornado Cash and how it's used for good instead of how it's always marketed as a money laundering tool?
Oh, that feels like a really loaded question.
It's a loaded question. I know. I'm sorry, Andrew.
I think it kind of comes back to an ideological question. What's more important? Is it more important to prevent money laundering, or is it more important to protect civil liberties? And I don't really feel like that's for me to answer, but that's kind of what it feels like to me. And it also just I wonder if the path that we go down is more blockchains where transactions are private by default. Think a Web3 version of Monero or something like that. And then does that entire blockchain then get blacklisted? Probably. But I think we'll find out.
Well, I guess I better not mention the blockchain that Monero sits on as one of their featured currencies, just to kind of keep that out of the general conversation. So
I mean, last I checked, the IRS still had a bounty out on figuring out how to trace transactions on Monero.
interesting. I did not know that. So good to know. For anyone who might be mining Monero, it's easy to mine, especially on older PCs if you don't have a fancy schmancy graphic card rig.
Probably going to spend more in electricity than you get in Monero right now.
Really, it's fallen that far with the rewards.
I think it was like that before the crash. The people that mine Monero are really just doing it to support the network, or they're using botnets.
Well, let's go with they're supporting the network.
Sure.
So, projects that are dying, protocols, teams, hedge funds like Three Arrows Capital, Alameda Research, Dragonfly Capital, took big L's this past year. 3AC actually was forced to file for bankruptcy. That was a wild time for their founders, which is Suju and Kyle Davies. And then from a project standpoint, I think we saw the rise and fall of maybe more the fall of Ohm Forks, which is from Olympus Finance, Tomb Forks, and then Ring Forks. Ring being a node setup. We had multiple CeFi projects like Yield Nodes also collapse this year. After, in their case, years of good profitability for some of their holders. I haven't checked on some of these other ones like Strong Block or Thor or some of these others, even like Red Light, who created their own blockchain for stuff like that. But ultimately, for some of these altcoin schemes that really from a community support standpoint did really well. I personally profited really well off of Tomb Forks, to be honest, this year. It was a great diversification of my bag. That was a great time for me. Obviously, crypto markets failing, never a good sign for all these smaller projects. I don't know. What's your take on those types of farms dying? Strangely, Drip is still around, but I think everyone's kind of holding their breath at this point.
I just think a lot of these DeFi money games were propped up by leverage and cheap capital.
Mhm.
And I would expect that they would return, or similar projects would return, under a similar environment.
Yeah.
But, when all the prices are going down because they're going down because of other, market factors, the less liquid tokens and the less liquid projects and the most speculative investments are going to get hit the hardest.
Yeah.
So, I think, an ohm fork is still an ohm fork, a tomb fork is still a tomb fork. People will put their money in those things again in the future.
I agree. And we'll transition into this section on, we were in a really great transition coming into 2022. We were, fresh off all-time highs. We were looking, there's a little bit of pullback, but we were looking for the market to explode. Um, a lot of people asked what I was thinking. I thought we were going to have this huge intersection of NFT, utility, GameFi, and metaverse. I thought those were going to be the three things. And I think for the most part, there are a lot of teams still building uh, on multiple blockchains, and more things are being built now, especially in this time of quiet. I guess this more quieter action that's going on with a lot of people leaving the space. It gives you a lot of time to test and build. But we ran down hard from the all-time high of 66K for Bitcoin. Bitcoin's now around 17K or something like that. I mean, this is ultimately, it's a sobering moment. People were in a euphoria from what happened, throughout 2021. Coming in and just stacking and people buying the top. I know multiple people who bought Bitcoin at 64K, thinking we were going to be seeing that 100K high. Definitely didn't happen in 2022. Any thoughts on that, Andrew?
I honestly think most of these, blue chip crypto prices are not actually about crypto at all. It's about the overall financial environment.
Okay.
And one of the things that I'm thinking about is how the generational transition that we're going through right now, with the boomers retiring in mass and that leading to kind of a tighter lending and borrowing market, as there's less demand for those kind of pre-retirement yields and more demand for during retirement yields. It feels like a little bit of a word salad, but yeah, like we're in a very speculative, frothy environment. Tech stocks and crypto were going crazy in response to loosening monetary policy in response to the pandemic. And then that all got shut off very abruptly. So, other than the demographic shifts, I just assume that, we're waiting for loosening financial environment again, and that those things would take off again. But I think the thing to consider moving forward is that we're not necessarily going to have all of that boomer money looking for, anywhere to stick it in the future. And that may mean that we may be in a prolonged, 10 to 30 year period where there's just not quite as much money that's willing to go into tech and crypto. That said, if we can have quote unquote real innovation, if there's quote unquote real adoption that is not just powered by speculation, then we can have a really good near future for crypto. So I don't think about like the price in a vacuum that much. I just think about, we were in a special time, and we both had a crypto bull market that looked a lot like similar previous crypto bull markets, but it was more violent and more aggressive. But, don't worry, listeners. The price of crypto is going to keep going up, if only for the reason that we're also going to be heading through a sustained monetary inflationary period. So actual values, maybe not relative values, but actual values of risk assets will continue going up, in my opinion. Not financial advice.
Yeah, there are other things that happen, other than monetary policy. Obviously, I think that the invasion of Ukraine and just the global reaction, I think had a hand in that with regards to just how now. I mean, obviously, the prices of energy is coming back down, but just seeing the spikes everywhere, with that, with Bank of Japan, obviously with their monetary policy around the world, economies, just really crumbling under inflation, and just trying to get to this section where, people are getting into crypto because it's money that keeps its value, unlike their local currency in the fiat world.
Certainly,
Do you
and we
think?
can certainly see dynamics about how will ETH being deflationary play into this next coming cycle.
Do you think there will be an event in 2023 that causes a further crypto decoupling?
Decoupling from what?
Just from local economies, so that everything doesn't depend on a specific, just doesn't depend on a specific dollar. Maybe.
I think that's really hard to say. I think
because that's really the ties that are keeping crypto where it's at, right? They have to break away from, dollar domination, or equities, things like that. It needs to be, something where crypto becomes the
I think it's
source of.
really hard to break away from dollar denomination unless the US does actually have a hyperinflationary event. I think that's really hard for me to see happening in 2023. Could be wrong. Crazy things can happen. But most crypto we see does not have in my mind, does not have the attributes needed to be used as a unit of account. As long as they're being traded on like speculative assets and invested in, that makes it really hard to use them as a unit of exchange. I don't know how we do this, but I feel like sticking with dollar denomination, but finding a way to, have something pegged to the dollar without being backed by actual dollars is still like the white rabbit that we're chasing. How do we do something that isn't unstable and prone to attack as UST was, without doing something that is as capital inefficient as DAI? So I'm like waiting to see like what's the better DAI or what's the more capital efficient DAI. But that's really a hard one. I feel like so long as we're using the cryptos as like an investment in something that we want to appreciate, that makes it very hard to use it as a unit of exchange. So then it's, how do we have some other sort of arbitrary static unit of exchange that isn't denominated in the price of a dollar? And I would say like there's other potential pairs that we could do with real world things. Like what if we had something that was like tied to a comparison between the price of Bitcoin and gold? What if we, use
back to the gold standard?
Yeah, what if we moved crypto back to a gold standard instead of a dollar standard? And we had like, synthetic gold. I don't know. The price of gold might be a little bit more stable than the price of Bitcoin. I don't know.
We could take the next 3 hours and really talk about this because there's so many interesting things.
You're asking some open-ended questions, Chris.
No, you're right. I'm not. We'll just call it this. To summarize,
Bitcoin gold pair.
Blue chips fell from all-time highs. Alt L1 coins drop hard. Meme coins and altcoins get completely throttled. Everything draws down from where they were 50 to 90%. Hopefully your portfolio is what we call all weather and survive the fall. If not, you need to recalibrate and figure out what you're doing. NFTs weren't spared from that either. Remember, NFTs are also tokens, and they also got splattered specifically on some of these strong blue chip Bored Apes and things like that. They all suffered pretty hard, especially in a year where people were famously celebrities were buying apes for north of 100 ETH. People were actually getting robbed for their NFTs as well. So to kind of get kicked while you're down, I guess is
Jeff Green ever release his TV show though? That's what I really want to know.
You mean Seth Green?
Oh yeah, what one of those green guys.
One of the green guys? Yeah. Tom Green? No. That'd be weird. Anyway, moving from that, obviously right now so I just want to say this. If you're down, it's okay. You can rebuild. Many of us rebuilt. And the key here is to just keep a good portfolio, stack blue chips, keep accumulating. When the market turns and explodes, you're going to be a happier person, I guess, in that perspective. But don't leave.
Untether yourself from your peak net worth.
There you go. I like that. I like that a lot.
I think I read it on Twitter, so it's not me.
Okay, fair enough. Well, then I won't attribute it to you.
There you go.
Or maybe I will. We'll just say Andrew, some guy on Twitter. Moving on to exploits. I think that probably outside of the CEX dips and just blockchains dying, these just hurt. These were just nasty. We had, Axie Infinity getting just totally thwarted for over 600 million on their Ronin bridge.
Oh yeah, that was a big one.
That was huge. That was one of the biggest ever. That was 625 million in March. I also forgot to mention, it's not even an exploit, but I guess you kind of say it was an exploit. Wonderland time in end of January. There's this weird period where Danielle Sestigali, the leader of the Frog Nation, the creator of Wonderland, as a clone or a fork of Olympus Finance on the Avalanche blockchain. Him and Andre Cronje from Phantom were going to create this beautiful new yield optimization platform that's been, to their credit, forked multiple times on different blockchains called Solidly, and SolidX is the trustless, permissionless yield optimizing system that was literally just about to come out. They were right around the corner, and then the report came out about the treasurer of Wonderland being Sifu, as also unmasked as Michael Patron, a former rugger with Quadriga CX for 170 million. It just caused this huge. I think honestly that was probably an even bigger contributor, at least from an average Joe retail standpoint. There are so many people who are bringing videos on using Wonderland as the perfect passive income system. Obviously 3-3 everywhere that people had, and frogs supporting each other type of stuff. It was just this interesting just ecosystem of things that just collapsed. We had other ones with, like, for example, Wormhole. Wormhole got hit for a gigantic amount, and Jump Capital, thank you for bringing in 320 million to back the assets of when the exploiter took the money. Otherwise, Solana was going to be in a world of hurt, more world of hurt than they are right now. Because they would have had 300 million in assets that wouldn't have been able to be backed. So
crazy.
I know. We had a couple more bridge
really
bridge
big
hacks.
Numbers we're talking about.
Yeah, this is no simple thing. And thankfully Wormhole had Jump Capital to come in and plug that hole. Nomad Bridge, which is on Moonbeam, which is a parachain from Polkadot that's Ethereum facing. They did not do so well with Nomad Bridge being hacked. They've slowly been trying to help people whose stablecoin assets were affected in that hack. But then the other one, which I didn't bring up during blockchains dying is the Horizon Bridge from Harmony. That's
Oh, that was a
oof,
bad one.
that was bad. That was super bad, to be honest, because there's a lot of great activity coming on Harmony. It was an ETH 2.0 based blockchain. Had a really fresh group of products that were coming about, specifically DeFi Kingdoms, a really great game that was on the blockchain, which has since left and moved to their own subnet on Avalanche, which is kind of doing okay. Either way, a lot of people have money stuck on Harmony because of the haircut in assets that are no longer backed, especially if it were these one assets, because they're like one USDC, one USDT, one BTC. They had a beautiful bridge from Binance to Harmony that worked really well for Bitcoin, and yeah, a lot of people got caught up in this. And to the community's credit, there's a recovery effort. It's going to take them. They're using the word years as our event horizon. So if you want to wait it out, there's a chance that your assets might get pegged. Now, if our colleague Jangle was going to be here, he would just tell you that you're never going to see that money. But I'm not going to give you too much opium. Andrew's not going to give you much opium either. But man, yeah,
It was a nice
one was,
blockchain until the assets weren't worth anything.
I'd like to say that's the case for most blockchains, Andrew. Most of them are nice until the assets aren't worth anything. But I guess this is crypto, and this is unfortunately nothing is guaranteed in DeFi.
Not when we're playing with experimental technologies that don't have jump capital ready to bail them out.
In this world of places where we're early, because we are early, I still think DeFi is the way that the future of how we do business. They're going to be winners and losers, unfortunately, and you just got to be careful out there. These are black swan events for the most part, things that you can't control that we didn't see coming. So, two more to talk about in terms of the exploits. We have Wintermute for 160 million and Beanstalk, both protocols on the Ethereum blockchain. In fact, that Wintermute
Beanstalk.
Yeah, Beanstalk. That was painful.
Did they reboot? Are they still alive?
They did. They're fine. I mean, so the Beanstalk exploit was ironic because it was actually a governance exploit because they didn't plug a hole or something like that, so the attacker could come in,
They
mint
had
a bunch of tokens.
too decentralized exploit.
Yes, and it was we can talk about it another time, but the idea is that they use their power to mint enough tokens to grant themselves power to do whatever they wanted, because in a DAO it's based on votes, based on how many coins you hold in the governance token. So it was one of those that you just kind of tip your hat. You're like, GG, but that kind of just talks about that 2022 was just really just full of bad things, but that's not true. There were a lot of good
Really
things
liked that model, though. I almost wonder if there would be an interesting way to fix that.
Well, they're back. I mean, they've been back.
I guess learning about how they fixed it would be an interesting place to start.
Yeah, that'd be a good place to start. So yeah, if you want to check into the post-mortem on what happened on Beanstalk protocol, feel free to do so. I mean, it was a great protocol to begin with. We know multiple people who are in. They got fairly wrecked by that. But it wasn't an issue necessarily with the protocol. It's more with the governance of it, which was not necessarily central to things like that. So, but there were good things in 2022. Right? They were good things, right?
I think so. Let me know, Chris.
Okay, so let's start with the biggest one, probably the fact that Ethereum goes proof of stake September 15th, 2022. That was a big moment.
Yeah,
maybe not for miners, but for a lot of people who were waiting on this, and we're now waiting for the Shanghai update so that people who have staked ETH2 will be able to eventually withdraw that sometime in 2023. But that was a huge moment, I think, moving from the original ETH work to the Beacon chain, which is a proof of stake chain. Was huge, and ultimately it seems to be doing fine. You can always check ultrasound.money to check out how things are going with today's deflationary status of ETH. And yeah, I think this is it's a good sign. I think them going proof of stake is a good thing.
I don't
lead
own
to
enough ETH, Chris. I need to
yeah, that's
own
the
more
thing
ETH.
too. You can look at some of these projects like Rocket Pool and Lido with liquid staked ETH, and Rocket Pool specifically, I might be curious about getting into because you may be able to make your own Ethereum node for as little as 4 ETH. So I think that'll be an interesting play. What are your thoughts about proof of stake ETH? Do you think that was probably the biggest win of 2022?
Yeah, I mean, I think it's a big deal for people that don't want to just own Bitcoin and want to own something that is designed to retain its value, and actually want to invest. And it's a much more sound thing to invest in now. It's also just bullish on ETH and these decentralized blockchains. I think in general, just because ETH has proven that it may take a really long time to do it, but it can upgrade itself without exploding. And they basically had a seamless transition, and it seems like they'll be able to do it again.
Mm-hmm.
So it's one of those things. I don't want to say it was boring. It was kind of boring, but when you're talking about a really important software upgrade to critical infrastructure, you want it to be boring. Like, it being boring means that they did their job. So they did their job, and it was a success.
Yeah, I agree. I mean, that to me, that had to be, that had to be probably the biggest technological news. There's a couple others that were pretty large. Avalanche, Google, not Avalanche, Binance got some big ups because Solana, they all got big ups through Amazon and Google wanting to provide infrastructure for Web 2 to Web 3 development. I definitely think that's one thing that's going to be great. We're going to see more Web 2 teams coming to Web 3. I think that we're seeing we saw that a little bit earlier in this year. A lot of developers were leaving Web 2, specifically, I think, with people not wanting to work in an office or work from home. We saw more developers with talent come down to Web3 firms. I think we're going to see the fruits of that definitely in 2023.
It paid really, really well in 2022.
Oh, yeah, they sure were. I will say that probably the winner of 2022 from a business development standpoint, if there's a blockchain that won, Avalanche probably comes a close second because they did win a huge contract with Alibaba as well to integrate their cloud services into Avalanche for development. Has got to be Polygon. Polygon said
you can't just have the best tech. You need the best business development, and a head start can help.
You need the best. Polygon definitely got a head start. They don't necessarily have the best level layer 2 tech, but I think they're kind of going to redefine things with this new ZK roll up that they're planning. But
Microsoft Windows wasn't the best tech either, Chris. Something to keep in mind.
Well, let's kind of go through the list of things that they did this year in terms of partnerships. They picked up Disney as a partnership, Starbucks as a partnership, Reddit as a partnership, DraftKings as a partnership, Meta as a partnership, meaning Facebook. Those are just 3, and those are all going to be NFT based. So if you're looking for NFTs in terms of where they may be popping off big next, personally, I think latter half of 2021 was Avalanche. I think next year becomes a playground for Polygon, specifically through that Reddit partnership with their digital collectible avatars. That's what they call NFTs. I think that's going to be huge. I think we just see a lot of big things that are happening. We're talking about the one with Starbucks, also NFTs, because it's going to be for their loyalty program. That's an interesting play. DraftKings is doing NFTs for famous athletes through Polygon. And I think that's also huge. They have a private blockchain where they're doing ZK rollups with Ernst & Young. I think that's going to be huge for institutional money wanting to come down and play on the layer 2s moving forward. Does this kind of hurt ETH in the long run? Possibly, because they're looking to be more deflationary, but we'll see how it affects that, I guess. As more activity moves to layer 2s like Arbitrum, Optimism, Polygon, Metis, some of the other layer 2s that are out there. We'll see how they all come together and make a big push. One other one that I'd heard about recently that I hadn't thought about was a firm called Securitize with Avalanche. It's just an easy way to get retail investors in Web3 to look at investments in the real world. I thought that was an interesting partnership there. One thing we talked about a lot, and at least in this second half of 2022 with everything collapsing, is the narrative of what we call real yield, where if you stake money in a protocol, you're actually getting low inflation, not high return, but high risk adjusted return while being a part of different protocols. The darling of DeFi in 2021 has got to be GMX for
GMX.
GMX.
Back that GLP.
Basically, you staking your liquidity to help fund all of the financial options plays that they have on you. You can do swapping of assets as well as taking long and short positions on various assets. The model has been copied multiple times now, and I think we're going to see a breakout of more of these types of programs. But GMX has definitely had its fair share of fans. Where we were following 10 of the biggest wallets on DBank, which is a dashboard for blockchain explorers, and most of them were buying up GMX like it was candy. So GMX is definitely going to be positioned well in the next year. Same with Gains protocol, which is on Polygon. They're expanding to Arbitrum as well. It's going to be a good ride for them, hopefully, and we'll see what else is out there. But yeah, Polygon redefining business development in Web3 in 2022. So congrats to them. I also have on my list that regulation is on the way. Is that a good thing? I think to a degree it is. Obviously, we want decentralization, but at the same time, we can't allow the amount of market manipulation and just attacks that have been out there in Web3 the past year. Whether or not regulation with regards to President Joe Biden in the U.S. signing that executive order in March or bring up the framework in September, based on that, is good or bad for crypto. It's at least getting the conversation started at the idea that there will be more regulation in this space moving forward. I think we're going to need that to get more institutional money down into Web3, because they're not just going to throw money willy-nilly down into the system, especially after all of the meltdowns we just talked about, earlier in the episode. What are your thoughts on this?
I think that's a great point. If you want institutional money to pump your bags, you can't then also want zero regulation.
Mm-hmm.
We've seen all these centralized exchanges not take their fiduciary responsibility seriously and lose their customers' money. And you can't have centralized financial institutions doing that. I think where it gets a little bit, is it a good thing or a bad thing? It gets a little bit confusing for me personally, is when we talk about essentially interfering with DeFi. And we'll see how it goes.
Yeah, that's the one thing. It's we do need more money more capital inflows into the system, but if it's not necessarily the wrong type of money,
if we want our bags pumped,
if we want our bags pumped, yes. But at the same time, it's do I want institutional money pumping my bags to the point where now suddenly large corporations, decentralized or not, are now going to be fighting for the same liquidity spots that I am? Moon boys, right? There's a Wall Street bets all over again. Hard to say. I just know with institutions comes backdoor deals and manipulations that we can't control. So it's all going to have to coexist. So it's all a matter of how that plays out in the next, we'll call it 3 to 5 years. Because, for example, Japan, I guess they voted earlier this year, they voted against a CBDC, or a central bank digital currency. So we're going to have to see how this shakes out in 2023. But anyway, thank you so much for being here with us today, Andrew. What I wanted to do is also get a prediction to you. What do you think is going to happen in 2023? Name something that you think is going to be a highlight in 2023. I can come back to you if you want to think about that.
Come back to me. Let me think on that.
Okay, so I'll give you mine. I think in 2023 is going to be the year of user-owned data and privacy becoming important in financial investing. There are multiple projects that are building out a more secure private blockchain or not necessarily even a blockchain-like network of privatizing your data so that you can own your data and take it wherever you like. I think that 2023 will see the beginnings of NFT utility being used for things like real estate deeds, insurance information, medical information, to the point where some of these businesses will be moving down to Web3 to provide services that you are looking for. To be able to just not have to worry about signing an hour's worth of papers at your escrow office, because that's all done online and done with digital assets. You have this now NFT that's going to be held up in escrow that is yours, and it is non-fungible and non-debatable, and all of this information is secure. It's private, so that it's even though it's immutable, it's not information that anybody else can see and tie back to you. I think it's going to be a huge part of the narrative somewhere in late 2023. I think that's when that's going to happen. I think a lot of the building is going to happen to get to that point. And I think we're just going to have a huge push towards decentralization, multiple blockchains working together to bring that information together and make it worth your while in terms of trusting decentralized finance as the way to really do business, or at least have your assets there for you to keep in self-custody.
All right, I got a prediction for you, Chris.
Do it.
We are going to see Web3 games, whether they are GameFi or just games, be a spearhead on improving user experience for Web3.
I like that. I was thinking about this yesterday because my kids are huge into Roblox right now. I think that if there was ever a system that could transform in-game currency to a Web3 based system, is just going to smash.
I feel like we're going to start seeing more blending of Web3 and Web2.
I agree, especially with
I
these
feel
partnerships on
that's
Polygon.
what needs to happen to improve user experience, and I feel like games, maybe even microtransactions, if you will, are a way that's going to happen.
Yeah, let's just hope that some of the big names like Apple and Google don't step in to try and sidestep such things. Especially if you're going to try and play on mobile through an app. Obviously, most of both of those have their app stores that aim to get a specific amount. Like for which one was it? Coinbase wallet that was thrown off of the app store because they were unwilling to share 30% of all NFT purchases with Apple or something like that, because they felt they had a
Third-party
right.
app stores on Android, man. Somebody's going to see that there's a lot of money on sidestepping the cut. They're going to do third-party if they have to, and it might have to be a big developer with a lot of money to launch something like this. But like we've seen things like the Fortnite devs sidestep bad app store deals before. But we'll see. But that's my prediction. Something that I'd be really excited about, because I feel like it's gaming that has the money and the users to make the incentives to make user experience better.
I like that idea. I'm going to go one step further and say it's mobile gaming.
Yeah, of course. Absolutely. Mobile gaming.
Yep, I think it has to be mobile gaming. I think it's easy for you to go to a store, buy a card that gives you that in-game currency, and then you just feed that code in, scan it with your phone or whatever, and it gets deducted from some Web3 based wallet that they create for you when you first sign into the game. And then you're just refilling and doing that, and they're taking care of custody of all of those assets for you with the asterisk that you can opt in to then self-custody those assets and refill and top them yourself if you know what you're doing. Ooh, I like that.
Yeah, and
I'll let you have
then
that
we
one
may
for
actually
free,
also have
gaming
like
industry.
we may get secondary trading markets that get built
Yeah.
on top of these in-game
Well,
currencies.
they wanted to do this with World of Warcraft, with guilds. Remember that? When they're
Oh,
trying to set up those, yeah, they were trying to set up trading in houses, with different guild houses and stuff like that. A lot of these concepts we talk about in Web3 have already been done just on a fiat landscape. To move them and decentralize them so that they're available.
because remember the incentives for the game devs is
Yep.
to avoid the credit card avoid part of the credit card transaction costs, but that's going to be harder to get away from than the App Store centralization.
True.
They're coming for Steam, for Android, for Google, and Apple. They're coming for that cut of the pie.
Yeah.
And that's going to be easier than credit card processors.
Yeah, I think this is a topic we could definitely dive into on a future episode. If you're ever around, Andrew, and you want to talk about it, I'm happy to do so. We know quite a few game developers that I think probably have a good opinion on this. So
Sounds
with
like
that,
fun. I'd
it
be excited to
does.
hear what they have to say.
But anyway, we could keep talking about it, but we'll wrap up for now. That was that was our look at crypto and web3 and DeFi in 2022. So much has happened, so much has changed. The types of investments that were out there at the beginning of the year compared to now, night and day difference in my personal opinion. But I think they're all steps in the right direction. I think all the bad projects got shaken out. Uh, Obviously that's kind of a blanket statement. There are a lot of protocols that have kind of gone by the wayside because of contagion or having their treasuries on CXs, and that's unfortunate. And I hope that many of them can find their way back to rebuild and come back stronger, at least in this new market that's coming about. So yeah, thank you, Andrew, for coming on again.
Thanks for having me, Chris. Happy New
Anything
Year.
you want to plug, sir?
No, not yet.
All right. Well, have a happy new year, Andrew. Thank you for joining us. We'll see you guys again in a future episode of the DeFi Zoo. Any comments that you have with regards to any projects, feel free to put them down in the comments. Follow us. We're going to be doing a little bit more shorts content to try to help out with giving some context to a lot of things we lead up to in episodes. We definitely have some other ideas on the pipe. On the burner, one of them being how to disappear in crypto and talking about privacy. That's one thing I definitely want to look into. And just some other things. And I feel like I left Andrew hanging with his 07. So we'll continue with our 07. Be safe out there. Enjoy the end of 2022. We'll see you next year. Thanks for joining us.